Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up 0.3% on the S&P. It looks like Nasdaq, Dow, they're up about 0.5%. Small caps up about 0.8%. Semiconductor 1%. Banks, energy, transport up about 1% or so. Same with the biotech, and emerging market is pretty much flat there. Grayscale Bitcoin caught a bid there a little bit, 5%, close to 5%, 4.3%. Positive today. Gold and silver potentially slowly making its way run up today. Let's stick with the S&P 500 ETF 65-minute chart here on Spider. So some of the things, couple of things we talked about yesterday on the last night's video. The analysis we talked about, there was a bearish divergence, but at the same time we want to give benefit of the doubt to the buyers with the short-term moving average rising. And this is the perfect representations with today's action. We can see that how when we're doing analysis, we don't want to be fixated in just one outcome, right? Because especially in the market, when I say market is we want to give benefit of the doubt to the buyers in the short term. That means what? It never means market is going to go straight up. It means in an event, when we do see a pullback like this, or that, or here, when we give benefit of the doubt to the buyers, that means in an event that there is a decline in the market, there's a high probability the market is pulling back to either recheck, retest the next support level to cultivate that higher high before making its move. The problem with a lot of people is every time there's a decline, they always think that that's the top. That's the correction for the decline. It's always, they get too dramatic, right? And so this is very, very important that, we understand that not only on the short term, mid-term, and long term, and despite the fact that we did see, what was that? What was a correction that we saw just on this correction here? That's 5.6% on the S&P. That's literally nothing. It's nothing. And just remember how many people were freaking out because we're seeing measly a 5.6% correction. So people freaks out every time there's a 5%, 6%, 7% correction. They do not understand how to truly invest in this market, right? They act emotionally, and they always let this market bully them around. And you don't want to be that person, right? Especially if you're a long-term trader, you're a position trader, you're a long-term investor, so you want to become a longer-term trader. You don't want to be sitting around scalping here and there, swing trading here and there, getting stopped out here and there, and then you end up missing out big moves. And this is something that I've talked about over and over again this entire year since the March lows, that you're trying to predict further decline or trying to avoid correction. What happens is then you miss out the big move that might be coming later, especially when we're in an overall bull market. So with today's move, we talked about there is some weight on that short-term moving average. We talked about this yesterday because last time back in March 8th, when we saw that short-term moving average retested, it acted as strong support. And this was back in 380s, right? Because we know that short-term moving average was supporting the bears for some time throughout this decline. But here, the short-term acted as support, supporting the buyers. And ever since the market has been continuing to move to the upside with the cultivation of higher lows and higher highs. So today we saw a gap down. And guess where it came? Straight to, not on the prior resistance, that micro-term support that I've given you on the last night's video, but it came down beneath it, and you can see how we've been hanging around to the dot here. You can see this is why it is very important you understand Look at that right here. That was the first hour. Second hour, there was some push, but it closed above my short-term moving average, right? So the second hour, buyers managed to keep that price above that short-term. Third hour, some fluctuations, stayed above the short-term. Fourth hour, stayed above the short-term. Fifth hour, stayed above the short-term, and it saw a move to the upside and then filled this gap because there was a down gap, right? And it's interesting because usually when the gap gets filled, it usually acts as instant resistance, right? But it looks like we just blew right through it on the 5th hour. And on the 6th hour, we got into that previous high there as a resistance. And we kind of closed the day with that spinning top candle there. That's not a reversal candle. That's just kind of a indecision. We're just right on the resistance. Market is trying to decide what it's going to do going into tomorrow. And you guys already know what I'm going to say, right? You guys been watching me for so long. You guys already know what I'm going to say. Well, benefit of the doubt goes to buyers in the short term. Now that the short term did act as support here, benefit of the doubt goes to buyers in the midterm, and benefit of the doubt goes to buyers in the long term. There's some kind of a shenanigan to the downside, obviously. Let's actually move that to accommodate that short-term support at 393, 391. And this vicinity at 390-ish area is going to be a much stronger support. Let's check out that oscillator here real quick. So that oscillator, we haven't fully crossed up yet, but we're kind of like just right there. So it's not fully confirming any kind of we don't have that cross to the upside. So the oscillator is actually kind of telling us there's still in the short term some kind of a bearish vibe. I don't want to call it sentiment because I think sentiment is bullish looking at the price action because we are still cultivating this higher lows here. That low is definitely higher than this low. We held the short term. We blew through that gap area. So sentiment is bullish in the short term. But the oscillator is giving us kind of that still little bit, the vibe that it is feeling right now, that it's a little bit not fully bullish yet until we see that oscillator crossing back up to the upside, something like this. And if we do see the price action continuing to the upside, right, or even sideways, that will give this oscillator to cross back up. But if this thing starts to fall back down to retest that short term, this might continue to fall lower. And if that's the case, things could look a little bit more hectic here, at least in the short term. We might come down and retest that 393 and 391-ish area. So either we see first 2 hours of a bullish sentiment or bullish price action tomorrow, because if we do first 2 hours, if we see that tomorrow in the first 2 hours, we will see this oscillators crossing back up, and the oscillator will want to go back up, and with that, this thing would want to push up to the upside. So I'll tweet things out if I see anything. Enjoy your evening and good luck trading tomorrow.